All right, let's jump right in. This should be a quick update because everything is going according to plan. And today's SPY was down 0.27%, rejecting from that negatively sloping 50 EMA, which is the expectation while SPY is in this risk-off territory below 442. Remember, we were expecting this sort of lazy dead cat bounce into a lower high before we head down lower towards 430. And the only thing that is going to change this projection is if we can break through that resistance above, which is between 442 and 444. So right now we can clearly see the bulls are weak and all of the price action is below all of the moving averages and all of the moving averages are negatively sloping. So it is still a risk off environment while SPY is below 442 and nothing is going to change that except price action proving us wrong and breaking out above it. Now, as we approach 430, if you're a longer term swing trader, you can accumulate risk near that risk level, but do keep in mind if it breaks, we're going down to fill the gap below 423. And again, we are not getting bullish until we clear the resistance above and break out of this daily downtrend. On the NASDAQ 100 triple Qs, we were down 0.14% today, and we did exactly what we were expecting to do, which was to hit that resistance at 366 and find a rejection that could take us back down towards 355 to 347. So just like SPY, price action is below a lot of negatively sloping moving averages. We're still closing below the 50 EMA. And the only thing the bulls can hang their hat on is that we did close back over the 5 EMA for the second day in a row. However, the critical resistance is 366, and that's where the triple Qs got rejected. So in order to get bullish, we need to clear above resistance at 366 and then 370. Watch the downside critical support at 355 because if we break that, it's a quick trip lower to 347, and then below that, we have the gap to fill at 333. On the Dow Jones, we were down 0.5% today, and I continue to tell you the Dow Jones is looking very weak because even with this oversold condition, we're barely getting a bounce up to the 50 EMA, and here we are back down below the lower Bollinger Band at 343 yet again. Now, it could be possible the Dow Jones is trying to work its way lower to fill that gap below 340 or test the rising 200 daily moving average, which means we could still have considerable more downside before we find support. But on the weekly chart, if we continue to close the week above 342, it is possible this is that inverse head and shoulders breakout, and this is simply a retest. Now, it is good news. The volume is drying up as we're getting selling. However, price action needs to prove it by breaking that resistance at 346. On the Russell 2000 IWM ETF, we were down 0.3% today, and the Russell is looking weak below all of these negatively sloping moving averages, but we have this critical support at the 200 daily moving average at 183, and in order to get bearish at this point, we need to break below 183. It was okay to be bearish below 188, but it is not okay to be bearish above 183, so wait for that support to break, and if it does, then we'll be looking for the gap fill below at 176, and we're not getting bullish until we can clear back above 188. On the ARKK ETF, we were down 0.22%, and again, still bouncing off the 200 daily moving average, but price action is below all of these negatively sloping moving averages, so we need to break back above 43 and 44.5 before we can get bullish on this ETF. If we break support at the 200 daily moving average at 39.3, look for the gap to fill below 36. On the VIX, we were down 0.93%, and the VIX is still crushing below 18. However, the VIX is building up a bull trend, as you can tell by the moving averages. So if the VIX does spike above 18, look for a spike in fear as the VIX elevates towards 20, and that is going to lead to some high volume selling. If the VIX continues to crush, that is going to be more bullish, but we need to see it in the price action. On Bitcoin, we're currently down about 2.3% as Bitcoin is approaching that next support lower at 25,000. And it's no surprise that we're still risk off below 27,000. So if you're waiting to get bullish, you need to see price action breaking back above that 200 daily moving average. On Tesla stock, we were up 0.83% today, and Tesla is very close to that critical resistance zone right around 243. And if we break back above 243, that is going to look bullish. However, if we get rejected here, you're seeing that the 20 simple moving average is getting very close to crossing below the 50 EMA, which is going to be a bearish crossover. And we do have a gap to fill down here just below 218, and price action could still go as low as 208 to 197 before we find critical support. So in Tesla stock, be very cautious right there around that 50 EMA, and if we fail to break above it, we could see high volume selling. On Apple stock, we were up 0.79% today, and Apple is doing very close to what I drew out, which was a test of resistance between 177 and 179 before a possible rejection to come down and fill the gap at 167. We can get more bullish if we can break above the 50 EMA, which is going to require a break above that resistance at 182. So jumping back over to the S&P 500, there's nothing on this chart that tells us we're out of the risk-off environment. If anything, today only confirm that we're still in the risk off environment with the bearish rejection from the 50 EMA, and SPY has price action below all of the negatively sloping moving averages. So there's no rush to get bullish. There's going to be plenty of time to get bullish if we can break out above and continue to look at this as a daily downtrend until it's not, which means SPY is likely still trending lower towards 430, which is our weekly support, and that is where we're expecting SPY to continue to trend toward. If you want to come crush this market, consider joining Bank Trade Alerts or the Stocks Channel Discord server, and you can find out how to join either service by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.